Hello guys, welcome to a Train Parrot. We're gonna do the market close update starting with the 4 hour. As you can see, the channel on the 4 hour RSI continues to respect the support. At the moment, that support is at 47 RSI. And I have found this particular pattern right before doing the update. I started noticing that this, instead of being a flat triangle on the top, because we already have a breakout on Friday, and then we came back to retest this line, it seems that we are instead now in a context of a symmetrical triangle. You can see that on Friday we hit 85,300, then we pinch the resistance, and now with the closing candle in here at 84,571, that confirms that this appears to be the resistance. So I'm pretty sure that many traders are going to be keeping an eye on this, and I want to give you a little bit of context because we were trading a symmetrical triangle throughout February, and it produced loads of fake outs. So watch out for the price action to continue that trend. It could perfectly break out in here and then come back down and then still do something odd, and that pushes us to expand the triangle, amplifying the range, and that is what is typical when you just start going sideways. To me, what matters at the moment is that we defend this line at 47 RSI. At the moment, that price is 83k. It's a moving target and it's very close to the bottom of the triangle, but a little bit higher than that. So we need to defend closing prices above that, in my opinion. Now, from the price point of view, we can see that we have our pivot around here. The previous pivot is there. So I would prefer that if we come lower in here, that we don't take the 82.4, because at that point, both we are pushing lower that pivot and we are also exiting from the triangle. There is a ton of reasons here for manipulation, and these symmetrical triangles as we approach an event tend to be really tricky, as I was saying before. And in just 2 days, we have the Fed meeting. Now there is just 1% chances of ease, and even though everything might be already priced in, I think what matters is whatever is going to be said in the Fed press conference, which is just half an hour after the rate decision. There are discussions on whether there's going to be or not rate cuts in the following meeting, and what sort of rate cut could be on the table. Looking at the daily time frame, we can see that we continue with this very painful attempt to break beyond the 200 daily moving average. We managed to close above it just starting with the weekend. Around Saturday we got pushed back down, and now on Monday we went above it for a few hours, came back down as we speak. And there has been a whale that bets 368 million with 40x. We already covered that in multiple videos. This is not new. What is interesting is that it's betting for specific targets that are quite low, starting with 69 and 58k. And it's perceived that that whale knows something. And I guess that is what makes it such an engaging story across all crypto Twitter and everywhere. To me, the price says that we are here just waiting for a confirmation of something. We're against 84k, and we continue to just humbly touch that level, which was support by the end of February and is the 200 moving average. To be honest, at this point, I would prefer that we put a low, we take the longs, and then we go and break out from the falling wedge to make it easier. But well, here we are just accumulating more open interest into the event, which is just by looking at the price promising additional volatility during that day. The RSI on the daily, it looks very similar to the price and the 4 hour, which is we have a symmetrical triangle in here as a consequence of being both as part of this potentially ascending channel that could lead us into an eventual breakout. And then the yellow line, that is the global resistance that we were speculating that could impact the RSI at around a level of 47. That at the moment is 85.415. So if we see the price on a daily basis closing above 85.415, that is again a moving target, we could confirm a daily breakout. To be honest, I really don't want a breakout. Let me explain why. With the meeting upcoming, I really don't like rallies prior to an event because it turns the whole thing just into a sell the news. Most of the time, not always. I'm gonna cover a little bit of general markets by the end of the video, and I'm gonna connect some dots with what I'm saying here. Reminder that we have a bullish cross on the MACD daily. So far it seems like pointing up. The momentum continues to increase to the upside. Let's hope that we are not gonna have just something like this where mid-January we start building momentum, but then we get another bearish cross and we start putting new lows. There is no guarantees that this is gonna succeed, but the only thing I can say is that this setup, this bullish cross, has more chances than the previous one that happened around the zero line. Both have a double bottom formation. This one did, and also this one. But the lower your start, the larger the reset has been, and I tend to trust it more. And I forgot to say this morning, we confirmed the bullish cross on the weekly. We're pointing up. Let's hope that this is gonna be sustained. Remember that all these bullish crosses around this area just led to a new low. And there are some articles that are saying, well, we might as well get a very similar price action in the rest of 2024, leading into up to 8 months of just sideways. I'm really hoping that is not the case. I got really bored of this megaphone pattern, not because I didn't manage to make profits. If you watch the videos across this, we made really great calls, both for entering, exiting. We'll see how we do with this one. CME. We are on Monday, so we should be looking at what happened today with the CME gap. The news is that the CME that we built over this most recent weekend is completely gone. You can see that the price went up to there, so all that green area or whatever was the actual gap is actually gone. Whereas the gap that we built the weekend before that we mentioned, we left $200 still of a gap, is still there. For that, the price needs to get slightly higher. I will say we need to get to 85,739. That is not enough to liquidate the whale, but there is a chance that if we get there, I might take out part of my profits. If I do that, I will let you know. You will learn it first on my Patreon. Of course, those are the spoiled ones, but shortly after it should go to my Telegram, Instagram, and Twitter. I usually take decisions based on data, so I'll see how we get there, if we get there, and then let you know. Do not search for my social networks on Google or anywhere. Make sure that you subscribe using the links in the description. I guarantee you that if you find me on Google, you're gonna find the scammer and not the real account. Opening test has spiked quite high at the moment for my taste. If we focus on this area in here, you can see that being below the orange line, that is typically a bottoming signal. But now we are crossing the zero line into the purple, getting closer and closer to an area where we should be taking profits. We are not there yet. This is just a let's pay attention kind of information, no action necessarily to take in here. Of course, if you want to close your longs or whatever, that's your call. That's not what I'm gonna do with this particular information. Another watch out information is that Cerberus is now pointing up, and a reminder that if we cross the level of 10, we're gonna get a buy signal. On a sideways market, those buy signals, as we saw in this area, were not really great. They were late signals, but always the warning buys were one candle before a dip, so I was always paying attention on warning signals to start looking for a long, and sometimes the buy was coming and I was already in a long. For example, in these moves down in here, we were already in positions. We were getting the signal at around 65 and we were taking profits when we were getting to areas that we were getting data confirming that that could be the top again. And I think I'm going to use it in a similar way. We are in a warning buy. We are already in a position. And if we see the buy signal, that I'm not going to treat it as, well, that it must be the one that is going to take us in a new range to the top. That could be actually perceived as we're getting closer to another local top if we continue sideways. All right, we are arriving here to the liquidation levels, the important information of the evening. And this is 85K where we still have that liquidation from the morning. It has just become heavier. On the bottom end, same story. So people are accumulating open interest on both sides. We saw that in the previous chart, and I suspect that we might approach the meeting of the Fed in a situation where both sides are getting super heavy, and that is calling for zigzag explosions, up, down, wiping both sides. So whatever you do as you approach that day, do not set your risk right next to the price. Have a plan for whatever direction in magnitude you may see. Let's zoom out on this and let's see if anything is becoming heavier on any of the extremes. I think everything looks more or less the same, so I'm pretty sure that here there are tons of high leverage traders. And I don't know if it's my idea, but around 67K we are starting to have long liquidations increasing, and that has started happening from 1 day ago. Interestingly, you can see that this was 1.7 million around the 13th of March, and it increased significantly on the 16th, and now it's much more heavy, and that is a consequence of longs betting on this at low leverage because it's quite distant. Again, 85.5 and then the 87.5 again are the heaviest, but the 85 has become more intense. On the past 30 days, 85.7 is the peak of the last 30 days of liquidation levels, and on the lower end we have 81.9, almost 82. Let's do some surgery to the order book. There is nothing significant and the longs are pulling out once again, but this could be just potentially a trend to the upside because it's holding this level. Maybe it's gonna push back again with the longs. I perceive in here a lack of interest from the longs at the moment. We can also confirm that with the ask level that is slightly higher than the bidding, so they are shorting the resistance, which is a typical behavior, of course. And now slightly more longs. I think it will continue with this boringness as we approach the meeting on Wednesday. Everything looks really flat, and don't think that because there's just 27,000 here in liquidation of longs that there is not enough open interest in positions open. This just means that you have kind of an equilibrium. Price can go in any direction and more or less liquidate the same amount of cash. On Sunday in the order book there was an absence of the price suppression that we were noticing all this period, but immediately as we start with Monday it came back, but this time is placed at roughly 92k with 86 millions. Then we have 47 million at 89.8. If we go to our falling wedge, let's see if we meet in here, that's 87. If we did a pump straight away we can get to 89, but in practice, in my opinion, in order to exit from here we need a couple of days, otherwise the move needs to be quite intensive. And although it's possible, I state my preference, I really prefer that we don't have a breakout towards the meeting, and I don't think that's what we're gonna get anyways, but just stating what I will like. And from the meeting I will prefer that they say something like, oh yes, we are gonna cut rates, and suddenly the market is completely surprised positively, and therefore they have to react by pushing prices higher. It's low likely that scenario, but that will be awesome, you have to agree. And if that was the case, I might have to remove my orders to take profits and maybe let it ride a little bit longer. Fair value gaps, you can see that we took fair value gap number 1, number 2 from the weekend, and we have just left this one that ends at 81,600. Then the price needs to move to 85,800, getting very close to potential liquidations of the whale, or come back down to 81,600 and meet up with this liquidation that we were showing earlier. General markets, let's do a very quick catch up on that and then we close with the video today. You can see that Nvidia closed in the red, Google and Amazon, Tesla, all of them, and the rest of the market is potentially absorbing that liquidity. We see a general green, and it's mostly tech, big tech, which continues with the sell-off. Well, dollar index, we saw the breakdown from this support weekly. We called and mentioned that this was happening around the 3rd of March. That was thanks to this big, massive red candle, and that now continues. We are testing this support and there is a chance that it's gonna lose it. At least the RSI has already done that, and that puts the odds against also a breakdown of the price. Gold has been putting or testing the chance of getting a new all-time high this week, at some points above 3,000 and at some other times below it. Remember that we had to adjust the targets to the upside. The 77 RSI was already met, and we talked about 85, if I remember right, and that is around 3.5K. VIX is doing something great, which is cooling down. Now, do we need more cool down of the VIX? Definitely yes, because this cool down does not necessarily look like a positive cool down. It looks like a retest of the breakout. And if you pay attention to the RSI, we had a breakout on mid-December, and all we've been doing with the RSI all this period is to do the retest with higher highs and higher lows. Now the actual VIX, not its own RSI, is kind of following the steps now of the RSI, with the breakout only on 3rd of March. So that is 77 days after VIX broke out following the RSI, and that's why we use RSI. Now the retest, or at least the first retest, happened on 23rd of December, and the first retest in here is happening on 17th of March. So that is giving a signal 91 days before the one on VIX, which is great. But if we continue on this trajectory and we start using the RSI to forecast what the price is going to do after the retest, what we have is a new low, and then we have a new high. So that could look like, instead of just a retest in a new high straight away, it could look like we enter in the previous range, we fool around, we put a double bottom, and then we break out. And I'm gonna leave that there sitting. Give it a thought and let me know in the comments what you think. And thanks to that potential move, the VIX cooling down is now allowing the Nasdaq, S&P to have a little breather. After having achieved our target, that initial target, if the VIX does and follow the path that I explained, then Nasdaq is gonna cool down in this area and come back for a retest of the neckline, and potentially even higher than that, to these levels like this. And following what the VIX could potentially do, then the Nasdaq could puke lower. This is the S&P, but the Nasdaq will be similar stories, doing something a little bit lower around the 21 weekly, and the RSI doing something like that. S&P potentially into the median, and then a lower low. Let's see, that is just a forecast on indexes. I'm not a genius. I tend to make loads of mistakes, and so with crypto, because I don't have a crystal ball. Let's see what's up with the stocks. Google is still following the trajectory to build a double top. Apple has also completed this pattern in here and broke down from this head and shoulders with a target around $193. Nvidia continues to follow our path. We have gone into 1, into 2, then we need to get into 3. That is a work in progress with the VIX cooling down. That could reach that 3, and if VIX creates a new higher high, then we can get that low. My target is around $70 something on the low end, and I'm really hoping that I'm wrong on this one, because when you get to these levels, that could drag a little bit lower. On the monthly on Nvidia, I continue to look into this area of the target of monthly RSI that more or less coincides with prices of around $70, but it's a moving target on the price. You can see Amazon, the breakdown on the monthly in here, and on the weekly is also a breakdown with a retest and then a lower low. That first lower low is happening as we speak. But at that time that we get that lower low, the price has just achieved the double top target, which was 189. And if this is saying something, it's saying, well, soonish we could get the price to carry on lower. But remember, price doesn't go in a single line, in a single direction. So this can kick back up before it does anything lower. And Tesla has exited my area of value. I was really looking for it to cool down around around 240 to 300 being that my area of value. But if I'm wrong and we lose the 240 and the RSI is already doing that this week as we speak, then the next area of support is around $170. That is the confluence more or less with the two trend lines, the ascending from the bottom and the descending from the top. So watch out for losing that level because the bleeding could get even into 171. If we defend the 240 and we reclaim it on a weekly basis, let's look at this from closer. This is just a week that has just started. We are on Monday. So by end of the week, if we reclaim that 241, 240, then we could have a rally into $300 as well. Palantir claimed back support at $81. Microsoft, I haven't changed my thesis, is again a rally to 21 weekly. We have lost the global support for now 3 weeks in a row, and Meta hasn't broken down yet from the neck of 591. RSI has already done that. And I'm gonna leave it in here. Guys, I hope you appreciate the video. If you do, hit the like, write down a comment down below, and subscribe. And I'll see you tomorrow. I'm really tired. I'm gonna go for a sleep now.